Traditionally, real estate has been unaffordable. The entry point for most projects is $250 to $1 million to enter into a building like this. Breaking it down to $5,000, $10,000, even $1,000 makes it more affordable now for people to buy in, whereas they've been locked out of that for a long time. People tend to not want to jump into real estate because they don't know when they're going to get their money back. But now, when you're buying digital real estate, you have a secondary market, just like stocks have a secondary market. Just like if you're buying Apple stock. You buy $100,000 worth of Apple stock today, and it goes up in value, and you sell some of it. It goes down in value, you buy some more back. It goes up in value, you sell some. The same thing can happen for real estate.
The first time you pitched this model, what was like the biggest objection that you got when you first pitched this?
I mean, I was speaking Greek. People automatically hear the word blockchain and think cryptocurrency.
Yes.
Right? And when they think cryptocurrency, they think illegal activity. If you just dollar cost average on real estate every month, you took $1,000 every month and bought into real estate, in a couple of years, you're gonna have $24,000 worth of interest in properties, and those properties are gonna be paying you dividends, and those properties are gonna be going up in value. 10 years later, you're gonna find yourself with that same, 24,000 could be worth 200,000 because the properties have gone up in value, the dividends are increasing, and that's what real estate does. It continues to improve in value because we can't manufacture real estate.
Red Swan, Mr. Ed, I appreciate your time. I want to get straight into it. Red Swan, y'all are a platform that takes traditional real estate assets and convert them into digital securities, essentially tokenizing these assets and connecting these properties to global investors or people that want to invest in the asset. How would you, and y'all have done over $5 billion in tokenized real estate assets right now, is that correct?
That's correct.
How would you define Red Swan's mission to someone who's never heard of real estate tokenization?
Red Swan's mission is really to democratize commercial real estate. What I mean by that is, change the way it's being bought, sold, held, and traded. And by converting to digital shares, we're now making it fractional, so people can buy fractional ownership of real estate at a price point that's more affordable for them. Traditionally, real estate has been unaffordable. The entry point for most projects is $250 to $1 million to enter into a building like this as a partner. Breaking it down to $5,000, $10,000, even $1,000 makes it more affordable now for people to buy in. And then if they want to add on, they can add on as time goes on. But it makes it more accessible for them, whereas they've been locked out of that for a long time. The second major hurdle for real estate has been liquidity. People tend to not want to jump into real estate because they don't know when they're going to get their money back. Yeah. There's no time certain that they can for sure know they're going to sell the property and reclaim their money. So that's another deterrent. But now, when you're buying digital real estate, you have a secondary market, just like stocks have a secondary market. So you can always advertise your shares for sale, and depending on what price you ask for, they'll be depending on how many offers you get to liquidate your assets holdings. So that's democratization of real estate.
Oh man! And essentially, folks can trade their shares, their tokens, as like a stock. Essentially,
absolutely, secondary market.
Do people, and anybody can do it? Do they have to have a certain, just like anybody can invest in a stock, the same entry point for this as well? So there's not anything that anybody has to invest, that wants to invest in. There's not any qualifications that they have to be met, any income qualifications that have to be met.
There are some qualifications. Right now, the SEC has stated that a U.S. investor has to be an accredited investor to buy our projects, which means they have some level of sophistication on investments. An accredited investor really is an indication of your holdings and your income status, right? And I think the direct definition is that either you're an individual making $200,000 a year, or a married couple making $300,000 a year, and or you have over $1 million of net worth, not including your residence. Those are the two definitions of accredited investor. And right now, that's what you have to be in order to buy commercial real estate in securities. That's going to change. The SEC is starting to lighten those rules. Pretty soon, a person will be able to take a test and show their acuity on securities and become an accredited investor. So we market to accredited investors right now who are qualified, but we also market to international investors, which we'll call Reg S investors, because they don't have to be accredited. So luckily, international people who want to invest in the United States don't have to be accredited. They just have to go through what they call a KYC process, know your client. It's just doing suitability to make sure we know who they are. They're not on any corrupt list or any money laundering list. Then they're okay to buy securities.
Nice, man. I want to get into the story, the personal story. Like, was there a personal story or a light bulb moment that led you to creating this and creating Red Swan?
The light bulb moment was, first of all, my previous colleague of a company I founded and actually went public, was going public and got bought out back in 2000. He called me and said, "You got to go to this conference, a blockchain conference. It's on, blockchain." I said, "I don't know what blockchain is. I'm not interested." But he begged me to go because he told me that I'm going to really appreciate the technology. So I went and I looked at it and I was really intrigued by, blockchain technology in terms of what it does. I immediately went to fractionalization of real estate for capital markets. But the aha moment was when the SEC made a ruling in 2018. They banned all ICOs, initial coin offerings, because they were kind of shady, and they didn't want that here in the United States. But they approved security token offerings, STOs, which is a blockchain tokenization concept. And when I said the SEC is approving STOs, has to be for a reason, using this blockchain. It was exactly the same thought I had when I saw the use of blockchain. So I said, they know something. They wouldn't do this if there's not a reason for it.
100%.
And I decided to start studying up on tokenization at that time.
Man, was there an early win that happened, like that first deal that was a proof of concept that said, okay, this works?
Yeah, I mean, before we had our license, we did a few deals that actually worked out. Nice. We tokenized the deals, and people were intrigued about the tokenization, even though they knew nothing about it. But knowing that they can have a group of people buy into a property and now have those same shareholders have the ability to sell those shares whenever they want to was intriguing for them. They said, "Look, sign me up. It doesn't matter if this takes off or not. By having this ability for us to get liquidity, so 25 people don't have to wait for the whole property to be sold, for them to sell their prospective interest in the property," was like major benefit for that for those customers. So nice. Those were the first early deals. But now that the whole world knows about tokenization and the United States government has really blessed digital assets, you're starting to see more people show interest in tokenization because they want to attract investors from around the world to their property.
Wow. And y'all do strictly commercial assets. Is there in all types of commercial, is there a specific class of commercial asset that y'all would stay away from?
No, everything that's income producing.
Yep.
That we would like to engage in. So that's power plants, apartment buildings, retail, industrial, data centers, all this. These are hot properties that you can tokenize. Even land that has oil rights can be tokenized and issued to investors. So anything that's income producing that deals with dirt or buildings, we're interested in.
Listen, the cash flow, the cash flow is what makes the deal work. I mean, when you think about it too, especially in this climate, a lot of investors definitely feel like locked out of commercial real estate due to high interest rates. How does Red Swan kind of change that equation?
By democratizing it, we're making it accessible.
Yeah.
By them registering on our site, they now have visibility to properties they've never seen before, never felt they can be able to be part of. And now seeing multifamily assets, hotels, now they can be a part of that. Even if it's a fractional interest, it makes sense. Because if you just dollar cost average on real estate every month, you took $1,000 every month and bought into real estate properties, pretty soon, in a couple of years, you're going to have $24,000 worth of interest in properties, and those properties are going to be paying you dividends, and those properties are going to be going up in value. And I'm a perfect example.
Yeah.
10 years later, you're going to find yourself with that same, 24,000 could be worth 200,000 because the properties have gone up in value, the dividends are increasing, and that's what real estate does. It continues to improve in value because we can't manufacture real estate.
No, you can't. See, we focus on boutique hotels and hotels. And when we raise, we'll of course go get traditional funding and we need to come up with 30 or 40%, then we'll go raise that 30 or 40%.
Correct.
With everything that Red Swan is doing now, when y'all tokenize these assets, is it tokenizing the entire asset and everything that's needed to fund the entire project, or you guys also still use traditional funding and tokenize the raise? Is it a combination
That's
of
a
both?
good question. So we first thing to do is you evaluate the asset. So you check the financial statements to figure out how it's structured. What does the current capital stack look like? Do they have debt on the property and also equity? And if that's the case, we would first look at which one is the most expensive of the capital. And typically, debt is not that expensive. Equity is more expensive. So we take the equity, and if let's say if it's a $100 million building and $50 million of debt, and that debt is still good for another 7 years, and the interest rate is known at, let's say, 5.5%, there's no reason to touch the debt because it's good debt for another 7 years. But that equity, that's $50 million of equity, that owner would probably like to recapitalize and pull out. That way they can keep the asset as opposed to selling it. So we'll recapitalize that $50 million up to 90%. So we can give them $45 million of cash that can be used to pay off their existing investors, take their profit, or if there are no other investors, they can take that money and use it as a down payment for another piece of property, right? So the whole idea is giving that owner liquidity so they're not having a lot of cash trapped in their asset. When you look at the amount of money trapped in an asset, that's what you call, unproductive capital, right? Is not taking advantage of his opportunity costs. It's just sitting there doing nothing. If this building, for example, is worth $100 million and is making $20 million a year, even if I pulled $50 million out of the building, it's still making $20 million a year, right?
Yeah.
So why have that money just sitting in the asset doing nothing? It's better to pull it out so you can redeploy it.
Yeah.
But the current banking system doesn't allow you to do that.
No, absolutely, absolutely. I know, and I'm assuming, especially for the secondary markets, there are safeguards that Red Swan kind of put in place to protect the investors. Can you speak to that a little bit? What kind of safeguards are in place to protect people that?
Well, first of all, we're licensed with the SEC. So we have to go through rigorous training and also put up bonds in order to be able to conduct business with the consumers. So that's one safety net right there. You're working with a bonded, licensed professional. Secondly, the real estate shares you're buying are tied directly to the asset that owns the real estate. So usually real estate is held by a SPV, special purpose vehicle, and that's registered with the whatever local jurisdiction records land, right? So Houston Office of Land Registry would show ABC Corporation is a registered owner for this piece of real estate. So once we verify that, now we know that the true owner is ABC Corporation. So we get the financials from ABC Corporation and get the board of directors to say, we want Red Swan to tokenize the interest of this piece of property. And when then we go ahead and convert those shares from being analog paper shares into digital shares on blockchain.
Nice, nice. Now, this is insanely intriguing to me, especially with somebody who, me being in real estate as long as I have. I truly see this. Are y'all the first of y'all kind in terms of tokenizing real estate? I believe there are other companies doing it now, but y'all the kind of the leader in this tokenization real estate movement.
I'm a modest person. So there are other companies out there, I'm sure. Some we're aware of, some that I'm not. But I think we are a global leader in this space. We've been out there much longer. We survived when others have failed because, some people were fast and spent a lot of money and the timing wasn't right. We're here now and the timing is perfect. The blessings from the SEC, the blessings from the federal government is now pushing on digital assets. So it's a perfect time to have the technology, the personnel, the product, and the capability and the licensing to move and scale this business.
Yeah, I'm big on creative financing, right? That's one of the reasons why this is also very intriguing to me. I always try to see how we can do deals, outside of the traditional model, to where we're not necessarily having to leverage traditional banks and financing because, of course, money is expensive right now. Interest rates are high. You spoke on it a little bit, but I really want to speak to how a company like Red Swan really circumvents high interest rates is to provide opportunities for investors to own assets like big commercial real estates like this.
How we circumvent high interest
High
rates?
interest rates, yeah.
We don't circumvent the interest rates. They are what they
They are
are.
what they are,
But
absolutely.
high interest rates means that investors will get a high yield on an asset. They still want to invest. High interest rate just means they get paid more. On the other side, for the sponsor like yourself,
Absolutely.
high interest rates means higher costs
Yeah.
for the asset, for your capital for the asset, and therefore you have to make more money to overcome that higher cost. But still, with a good product, that's possible. I mean,
100%.
think back in the 70s and 80s when interest rates were at 16%, people were still productive,
Yeah.
still making money,
Yeah.
right? So I think it's still possible.
I'm glad you said that too. I remember the first hard money loan I got for my first real estate deal. I was a single family home, and I was paying 13% interest on that hard money loan. And I remember I was asked like, man, why would you pay so much in interest? I said, well, wait, why not? They gave me everything that I needed to get this property done. I don't have to come out of pocket to fund this deal right now. Like, they gave me everything I needed, and once we're done, it's going to cash flow, which is important. So what does it matter necessarily, the interest that we're paying? So I definitely understand that concept as well. When so for the younger generation that's coming up, because we do kind of, we're talking about, we're future pacing, we're seeing this thing as a way of the future. How will it impact the younger generation coming up as real estate investors, as folks that are literally looking to get into commercial real estate? And will it fast track their ability to get into commercial? Because a lot of folks do a lot of residential, then they jump into commercial when they feel like it's time. How will it impact commercial investing for younger folks in terms of speed to get into it?
Well, I think that, first of all, the younger generation, we call the next gen, are going to be inheriting all the wealth over the next 20 years. It's predicted that the next gen is going to be transferred from the baby boomers to the next gen over the next 20 years. Approximately $84 trillion is going to transfer of wealth. So we look at that as being where the puck is going, right? And so that's what we're focusing on, that next generation. And if you look at their buying habits today, these next gens are heavily looking at digital technology. A lot of them own crypto.
Yep.
A lot of them own NFTs. So that's their mindset. And so we want to make sure that we educate them on how to quickly and easily understand real estate and start buying real estate rather than just doing it as a hobby or doing it just for fun, like you might do crypto and hope that it goes up.
Yeah.
Put the feasibility and analysis behind it so you can kind of understand why you're buying a piece of real estate for one versus the other. And that's what we want to educate them on. But the process for buying for them will be much easier than it is for
us,
you and I. Yeah.
Absolutely. And speaking of NFTs and blockchain, sometimes a lot of people when they hear NFTs are kind of like, because you hear the bad things that happened during COVID about NFTs. Is there a myth? Is there something about, well, not so much blockchain really, but is there something or a myth about blockchain in real estate that you just wish would disappear?
The myth, the negative myth.
Right.
Some people automatically hear the word blockchain and think cryptocurrency.
Yes.
Right? And when they think cryptocurrency, they think illegal activity, right? The record's been set straight now with the government saying that the dollar-backed stable coins are legal currency and legal tender. But there's still this negative myth about real estate or about cryptocurrency that it can be snatched out of somebody's wallet, and once you lose your address or your wallet keys, you lose your assets. Those are true with cryptocurrency because cryptocurrency is like a bearer bond. It's like cash. If you leave your cash on the table and somebody takes it, it's gone, right? And same thing with cryptocurrency, because if you have it in a wallet and you give somebody your wallet address and they take it out, it's gone. But with securities in blockchain, they're registered on the blockchain and registered in your name. So people can't just take your assets out of your digital real estate assets out of your wallet because it's registered in your name. All you have to do is call back Red Swan and say, hey, I lost my keys to my wallet, or I can't find my wallet. And we know that you're the registered owner because it's listed on the. We can burn those securities, make them disappear, and reissue new ones and put in your name. So you never have to worry about it. So that's one myth that we like to go away. That the blockchain is associated with cryptocurrency because crypto is just one aspect of blockchain. The technology does many other things in terms of tokenization or making transactions much more efficient. That's more global as well.
So if somebody lost their access to their blockchain, they haven't lost their they haven't lost their tokens and
They haven't.
they have not.
Yeah,
Fantastic. No,
is on the recorded ledger, which is the
yeah,
blockchain.
exactly.
And so therefore, it always can go back. Matter of fact, it's safer than putting it in the bank. It's safer than having it in your safe because somebody can steal your safe and it's gone. Somebody can hack the bank and it's gone, right? Especially the bank only covers up to $250,000 in terms of FDIC. So if you have $2 million in the bank and somebody hacks the money out of your bank account, you're only insured for $250. The rest is gone. On the blockchain is register your name. No one can hack and take your assets from the blockchain
Nice.
unless you give them your access.
Do they have visibility as well? What kind of visibility do they have as investors on the blockchain? They can see everything going on.
Yeah, so if your assets are in your wallet, you can just open your wallet and look and see all the different assets. So all the different properties you've invested in, how many shares are there, and then you can click to see what the value of those shares are.
Nice.
So some people can track their entire portfolio of digital assets on one sheet.
Nice. Is NFTs involved at all with this?
We like NFTs.
Okay.
We can't sell NFTs because that's not our business, but we can offer NFTs with a digital security of a hotel, for example, and we are. We have 7 hotels that we're tokenizing, and they're all destination points, like the Hamptons, the Capri in the Hamptons is, the Hamptons is a very, very exclusive neighborhood back east, and it has a nice beach, and so that's a hot property. Well, we're offering that property for sale with tokens, right? So you can buy, shares of that property and own income from that property. But we're also offering through the management a NFT. It gives you VIP access. So now you can secure 1 day up to 5 days free rent or free hospitality in that hotel, and you have a VIP pass to go to the Sky Bar or go to the lounge. You get it anytime you want because you are a VIP, and that's good for 10 years. So that's like having 2 assets in one, right? You have the digital security, which is giving you income, equity in that property, and then you also have the NFT that's giving you rights to that asset. Both of them could be sold at a price point. We only sell the securities, but at some point, that gift that you receive, this NFT, could be retraded peer-to-peer because it's not in stock.
That NFT could be retraded. It's like it's the
Exactly.
same.
Exactly.
That is special. That is special, man. This with the vision, because I know y'all have a heck of a vision for Red Swan. If Red Swan is fully realized by 2035, what does the world of real estate investing look like?
I believe Red Swan will be fully stabilized by 2025.
2035, yeah, like 10 years from now.
10 years from now.
Yeah.
I think you're going to see a tremendous amount of assets on chain. They're already predicting by 2030, which is only 5 years from now, $16 trillion worth of assets will be tokenized. This is from Boston Consulting Group, right? And I think that's happening. You're seeing more stable coins coming on board. You're seeing more tokenized assets. You're seeing tokenized treasuries, tokenized money markets, tokenized private credit. So all this is happening as we speak right now. And I think you're going to see that 16 trillion or more by 2030. By 2035, we'll probably be looking at $30 to $50 trillion of assets on chain, which is why this is such an exciting time right now. Adoption is happening fast. And usually when people catch wind of positive adoption, like the internet, for example, it takes off fast, right?
Absolutely.
Just because they realize how much they're saving. Look at AI as another example. People who are using AI are very excited about it because it's saving them so much time and is such a powerful tool that saves money. Those who are using it are taking a leap ahead. Those who are not are taking a step backwards, right? And when people realize that they should be involved in it, all of a sudden they rush at it because they feel like they're missing out. That's what's happening right now with tokenization.
Wow. Well, the first time you pitched this model with Red Swan, did you get objections? What was like the biggest objection that you got when you first pitched this?
Yeah, I mean, I was speaking Greek.
Could imagine.
I mean, no one knew what I was talking about, and some people, questioned my my sensibilities, that maybe I'm losing it or something, because it seemed like a far-reaching concept. But as time progressed, you started hearing whispers of this, and you started thinking, maybe something. First of all, hey, Red Swan's still alive; they're still there. But now I think it's common knowledge for most that tokenization, digital assets, is here to stay.
Now you're getting the calls.
Now we're getting calls, but I'm getting more calls to explain what this is,
Yeah.
and to teach me how to get involved, and let me understand it like I'm a 2-year-old. I get those calls every day, and it's hard because I don't like to say no to people.
Yeah.
But if I have to answer all the phone calls and tell the story without a paycheck, then I'm not being very productive for the company. So what we try to do is do like we're doing right now, podcasts. We do. I'm invited to speak a lot at different events around the world, and that's how I get the message out.
Wow, nice. For the folks that that are watching this and like, man, I want to be able to invest. I want to be able to invest in something that I can sell and trade like a stock, and that's backed by a real estate asset. Where do they just tap in with Red Swan? Where can they go to see available assets that they can invest in, or potential assets they can invest in?
Sure, they can come to our website. So visit redswan.io is the website, and they'll see all the projects that we have tokenized, and they'll be able to express interest, meaning that I would like to buy $10,000 worth, or I want to buy $1,000 worth, or I want to buy $2 million worth. They can do that on our website, and that kind of logs in their order. From that logged in order, it now goes to the broker-dealer division. They contact them to do their feasibility, their suitability of the customer, and KYC. And then once that's done, they now will take their money and actually execute that transaction.
Oh, nice, nice. And again, for the folks out there, is there a success story? Can you share maybe just one success story of like an everyday investor who benefited from the Red Swan model?
Yeah, I mean, there's investors. Like I said, we had an apartment building here in Houston. It was called I'm sorry, I'm thinking about it, 317 units.
It's in the city?
It's in the city. The name of the property is eluding me now, but it'll come back to me. But anyway, it was a $52 million transaction. We tokenized. We were able to find 35 investors who wanted to come in and be investors in that property. They're very happy with the investment. The property has gone up in value over 35% since they did that. That was in 2019. So that's a very strong win for them. They're getting their dividends. And so that's a success story, and that's a framework where I think rather than be 35 investors now, I'm thinking there could be more like 300 to 400 investors on a property, because more people know about it and more people want to invest at a smaller amount. So, and the property's called Nottingham, by the way, Nottingham Village.
Nice.
Yeah, now it's come back to me.
Right,
But yeah, so that's a success story. There are a few other success stories, but I see many more success stories coming. I have people calling me from Japan who are major asset managers of real estate who want to buy whatever we can put our hands on, because they want to turn around and resell it to the Japanese market, right? Because the Japanese market is looking for higher yield. If they can get 7% yield in the United States and they're borrowing at 1% in Japan, well, that's a pretty good arbitrage for making money, to borrow 1% and turn it and invest for 7%, right?
Yeah. Say somebody in Japan that is investing, could they trade anywhere globally? Can they trade if they wanted to anywhere globally, or are they confined to trade in the United States?
No, they can trade through us,
Through y'all,
anywhere globally. So they would bring their shares back and say, hey, I bought 100,000 shares. I want to sell off 20,000 shares. So they list 20,000 shares on our ATS, and then now all of our registered members can see that person is trying to sell 20,000 shares and their asking price. They can do their due diligence to see, what else is going on in that market, and then they can say, yeah, I like that asking price. I like that 7% return. Or they can say, no, I want 9% return, so I'm going to lower the price and offer you this, right? And that's how the secondary market works.
No, that works. So they set the price, and it's up to the person that's buying it to make sure it makes sense from a cash flow perspective.
They set the price, but the market sets the bid.
Got you. No, that makes sense. And when you work with traditional institutions to handle the bulk of it, not the raise and not the equity component, Are they usually tighter on their terms because of the way you raise, or are they essentially giving you traditional terms as if you were doing a traditional transaction?
When we raise for
When you,
tokenized assets,
yeah, when you raise for tokenized assets, like, are they tighter on the percentage? Like for us, we'll raise 30%, right? Are they usually making you raise a little bit more because of the way that you raise,
when you
or
say they, you're talking about
the
banks?
banks? Yeah,
Okay.
absolutely.
Banks are different, and banks are getting used to this concept. Before they were totally against this concept, but now
Yeah.
you see companies like J.P. Morgan Chase have just announced that they're financing collateral based on cryptocurrency, right, and digital assets. So they're starting to get, ahead of the game.
Yeah, for sure.
But to answer your question, is typically they don't have a say with regards to what the LTV is going to be, because we're usually coming in on an existing asset that's already stabilized, that already has a bank loan in place. So we're not replacing the bank loan.
So you keep the
we're,
bank.
We're
Gotcha.
replacing the equity and keeping the loan. Now, if we're here to recapitalize the loan, the debt, then we're talking about replacing the debt with maybe a bond, which would be a collateralized
Yeah.
instrument. So yeah, usually banks are going to be really not relevant in this
Gotcha.
unless they have terms saying that you cannot replace your equity more than 49% without our permission, or you cannot have any shareholders on your LP stack who have more than 20% interest, because that means they have a controlling interest or influential interest in the project. And banks want to make sure any what they call KP person is checked out by the bank, right? So those are the only restrictions we see with bank debt.
Absolutely, absolutely. That makes a lot of sense. So the banks usually, is the way y'all do it. I can see how they're not necessarily a factor, especially if you're just taking on a debt that's already there. A lot of times, though, if we do something like that, we just assume the debt on a commercial deal. The the bank that's holding the debt also has to approve us,
Yeah, right.
as the folks
That's
coming on.
correct.
Is that a similar?
Similar, yes, because
Okay,
you're the GP,
exactly.
and the bank is giving, or you're assuming the bank debt. They want to check you out in terms of your credibility,
Right.
and as long as you are credible and you also have the capital,
Yep.
they're looking to do business. But where you get your capital from, they don't really care unless it's somebody who's coming up with at least 20% of that capital. That becomes your co-GP partner, right? And they want to know who that is. If it's just people who are investing less than 20%, they're agnostic to those people. They're just looking at you.
You know, I mentioned tokenization to somebody before, and they was like, that just sounds like a buzzword to me, man. That just like, what would you say to somebody that's thinking, that has that frame of mind about tokenization?
They need some knowledge, right? I mean, there's a lot of lack of knowledge in
Yeah.
the world right now, and that's unfortunate. But people are going to have to speed up their education on this concept, because either you're going to be first or you're going to be last, right? If you're first, you get the lion's share of what's out there. If you're last, you get the crumbs who are out there, right? And sometimes if you're last, you may even put out of business.
Yeah.
Somebody might just take you out altogether. So I think quickly getting knowledge about how to get involved in this is the first thing somebody can do to benefit themselves, because it's a whole new world that's changing. The financial world has changed. And if you're not knowledgeable about it, then you're behind. And so I say, hey, get smart. It's not hard. Read the paper, type in blockchain, type in tokenization. Once your mind is set on it, you're going to be seeing
Yeah.
things all day long, and you're going to be tied into where the communication flow is for tokenization, and you'll learn a whole lot.
Yeah.
But if your mind is not even thinking about it, then the whole world of digital will just pass you by.
Yeah, no, absolutely, absolutely. Man, this is amazing. This is amazing. Now, what I know you guys leverage AI as well. What y'all do? How does AI fit into anything that Red Swan is doing right now?
AI is intelligence. Everything we do now, we run through AI, whether it be replying on an email or doing research to and analyze the asset's value.
Yep.
We're using AI, right? Because AI tells us everything that's out there,
Yep.
and then structures it in a way that is easy for us to comprehend. So AI is very important. What we're doing specifically is customer suitability. When a person first comes to our website, we need to know who they are, what they have, what they're looking for, and are they suitable for this, right? That's part of our SEC license requirements. So the AI agent, we have a live AI avatar that will interview you when you come to our website and ask you these questions. You know, how long have you been investing in real estate? How many assets do you have right now in real estate? What type of assets do you have? What's the net value of the assets you have in real estate? And what type of real estate are you comfortable with? Apartments, you know, office buildings. So it goes through that form of questioning so that it has a profile for you. And that AI keeps that profile on our database. So when you come back, it remembers your profile and says, hey, thank you for coming back. Would you like to look at some apartments? I see that's what you put down on your profile. Yes, we have a few new apartments. Would you like to take a look? Or how can I help you today? Are you looking to evaluate any information? So AI is going to be very, very helpful for customer service.
No, that's amazing. That's amazing. You know, very similar way we leverage AI on our residential side as well. Now I wanna try to go to some kind of quick rapid fire questions. I want to prep you for this one. These are kind of quick rapid fire.
Rapid fire.
Yeah. In one sentence, why should somebody invest in tokenized real estate right now?
Efficiency. I mean, investing in tokenized assets gives you affordability. It gives you efficiency in terms of savings, and efficiency means higher yield.
Absolutely. Absolutely. Describe Red Swan in 3 words.
Liquid assets, access to high quality assets, and total democratization of real estate.
I love how you gave me 3 full sentences. I love that. So if you could choose, let me ask you this. If you could choose, let's say 10 million in traditional assets today or 10 million in tokenized assets over the next 10 years, what would you choose?
I would choose the 10 million of tokenized assets because I don't want to be locked in to a traditional asset for an undetermined amount of time. I want to be in control of my asset, right? So I would choose the tokenized assets in a heartbeat because even while I'm holding them, I could be trading them back and forth week to week and taking that arbitrage and making additional revenue on top of the annual yield is providing me or the quarterly yield is providing me. So yeah, I would rather go with that because it has much more options for liquidity and also profitability.
That's a level of control that is pretty much unheard of in real estate. Can you break that down just a little bit more? What you just said, you own shares in the assets, you can trade them while still getting the benefit of the yield of the asset.
Right. So you buy $100,000 worth of shares of this building we're in right now, and you know you're holding those in your wallet, and it's paying you 6% dividends on a quarterly basis, right? And you decide, hey, you know what? I would like to. I see that I can sell. I bought this 100,000 shares for $1 a share, and I put 10,000 shares on the market to sell at $1.20, and somebody bought it, my dollar. So I just sold 10,000 at $1.20, right? Now I'm looking out to see who might want to also offer these shares to sell, and somebody might be offering it a month later for $1.05, right? So I buy it at $1.05, right? And I just really made money on that trip, and now I'm holding this at $1.05, and I put it back out when some good news happens about Houston and maybe this property. I put it back out for sale. I asked for $1.35, right? And somebody buys my $10,000. So I'm trading back and forth on my inventory, and I'm making profit. Now, these are short-term profits, which means you have short-term capital gains. But still, even if you're paying tax, you're making profit on that. And that is on top of the 6% yield you're generating from the asset just by holding on to it. So, yes, these are unheard of opportunities to trade, just like if you're buying Apple stock. You buy $100,000 worth of Apple stock today, and it goes up in value, and you sell some of it. It goes down in value, you buy some more back. It goes up in value, you sell some of it. The same thing can happen for real estate.
How often are these trades happening in the secondary market? Let's say an average deal. How often is an investor making these trades?
Well, I don't want to make it sound like it's very active right now because it's not. But this is where we're headed with it because you need to have more assets on chain to have more activity, right? But you asked about why I would buy digital is because I have that optionality to trade on it. And so if people who own the same property and have a desperate need to sell those shares and they put it out there for a price cheaper than I bought it for, I can buy those shares at a cheaper price, right? And if I want to sell it because there's been great news about the property and I put it out there and somebody wants to buy it, I have the option to sell it to them for a higher price. That doesn't exist today with regular real estate, right? Matter of fact, you're not in control of selling. The owner, the sponsor of the property is one who calls the shots on when to sell the entire property and then give you your share back, right? When that's going to happen, who knows? But think about it. If you own those shares right now and you're trading back and forth for the next 3 years, look at how much additional income you can make trading shares you own as opposed to sitting on it and just waiting.
Yeah. And somebody who purchased, who's invested in the secondary markets, and they want to list their shares, it's not just limited to the people that are already owned. That can be for anybody that wants
Correct.
to come.
Anybody around the world.
Everybody around the world that wants to
who
buy
comes to the site and sees their offer for sale can make a bid to buy those shares.
Nice, nice. Love it, love it. What's one book, podcast, or mentor that really helped completely change the way how you think about investing?
Wow, that's interesting. Well, I've had heard many podcasts on Hedera, which is a blockchain, which they focus on real world assets. So I've heard a lot of, good chatter about tokenization on Hedera. There's also a company called STM, Security Token Market, and they track a lot of tokenized assets. They track the entire digital industry for digital assets, and I think they put out a lot of great information that you can learn about. And of course, there's always Red Swan's website that has all the interviews, podcasts, statements, articles that we put out are all chronicalized on our website. So that's educational as well. So people can just dial in, look at all those YouTube videos, and learn a lot.
Yeah.
And people have told me they've done that.
Yeah, and I highly recommend it. I highly recommend it for folks. Lastly, for the people watching and listening that are intrigued, and definitely as at least even a little as intrigued as I am, if they wanted to learn more and tap in with Red Swan, they can go to the website at Red Swan, check out what y'all have available, read up on tokenization on Red Swan, and that's redswan.io, correct?
Redswan.io.
Fantastic, fantastic. Well, listen, Ed, this has been incredible. I can't thank you enough for your time. I can tell you that this is definitely going to be impactful because this is a conversation that I know needs to be happening a lot more in the real estate investing space. And I do believe, like yourself, that this is definitely going to be one of the ways, once it's taking even more realization in the global marketplace, we're going to be doing a lot of real estate deals, tokenizing these assets, and being able to sell them and purchase them as shares. So this is amazing. I can't thank you enough for your time. Appreciate your time.
Thank you, CJ. I appreciate you being here
Absolutely.
and spreading the word because I think real estate builds wealth.
Yeah.
You buy in small increments, you're building wealth in small increments. And I think that's what people should practice.
Absolutely. Absolutely.
Thank you very much.
Appreciate you, sir.